Millennial day traders are beating Warren Buffett at his own game, and this is significant for a lot of reasons. Joining me today is Frank Holmes, CEO of U.S. Global Investors. Frank, welcome back to the show. I'm happy to speak to you about this topic and much, much more today.
Yes, and it's great to talk to you regarding your friends and peers. Your age are game changers, and it's so important for the operative word here is called price discovery. In an ecosystem, in a financial ecosystem, you have to have minnows, not just a bunch of sharks and tunas. You need a complete ecosystem. And all those little minnows really ignite price discovery. And what's happened over the past 30 years is this incredible regulations has got rid of market making, professional market making, no more capital. Now it's all gone to quants, like Citadel Capital is basically providing with a digital world, the market making. And what that's done is enabled a fintech company, which everyone hears of now. And the other one is called Acorn. So Robinhood and Acorn are game changers because they allow young investors to come in and play in the game. Whereas the Merrill Lynches of the world, the bigger firms, you have to have $25,000 or $10,000. And every time you do a trade, it's $100. You open an account and it's an incredible experience on their app, on Robinhood's app, and it's free. So you can basically trade ETFs, stocks, GLDs, if you want a bullion play. It doesn't really matter. But the fact is that they can be players. And that's, to me, is great to financial democracy. It's a great equalizer because a lot of young people felt they just had to have too much money. They didn't have enough money, or the commission tickets were too high, and that's gone.
Wait, so millennial day traders on Robinhood are the new market makers, is what you're saying?
Well, for sure. And they facilitate in price discovery. And they're smart. They're using the internet. They're using history. They're quick to go and look at previous data, which going back when I first got into business, you got a chart book once a week. You get a chart now book by the minute. Look at Kitco's phenomenal 24-hour gold chart. Gold trades 24/7. Well, guess what? You have the facility. That never happened when I was a young man. So we have people that go in and dig down and research, and I think it's very, very exciting.
So this is actually the topic of your discussion at the Denver Go Forum here. You're one of the presenters, and you're talking about this, and you're saying that the millennials are beating Warren Buffett. They're timing the market better. They're able to predict price movements better. And you're saying it's because of these new tools that we haven't seen in prior generations. What else is helping these millennials become such good traders?
Well, I think they got stuck at home because most of their money was going off for experiencing the world. And what we found in particular with our JETS ETF, which had record inflows, 70 days and $1 billion came into it. We saw 25,000 millennial investors buy before Warren Buffett became negative on the industry. And a week after it came out that he was negative, the airlines then surged 50%. And so it goes to show that they're not stupid, but the general thought process of a lot of the major media platforms is they don't know what they're doing. One kid has a tragic, doesn't know how to read his financials and commits suicide. So everyone in the industry is bad. Well, that's like saying one millennial has a car accident and no one can drive cars. It's tragic, it's sad, but I'm sharing with you that there were early investors in gold. You can look at, now the Robinhood data is now all of a sudden they stopped you providing that, but you could just see the accumulation and the growth in shareholders in the royalty companies like the Franco, the Wheaton, and GoAU, our gold equity ETF. We saw them buying during the whole process when actually people were selling earlier gold. And the other thing that's really interesting to me on the app of Robinhood, it has a column for gold. You don't see that with Schwab. You don't see that with TD Waterhouse. But they look at gold as an interesting alternative asset class. They also allow them to buy Bitcoin or Ethereum. So this whole new fintech model is quite remarkable. And I think for CEOs and CFOs, they've got to be thinking of more webcasts like we're doing now and telling their story to the millennials, because this will turn around and attract them to be buying their gold stock.
How is the stock picking process of a millennial different than someone of an older generation? And actually, if you're a millennial watching the program right now on YouTube, comment below on what you're doing to pick a stock. Frank, what do you think they're doing that's making them stand out?
Well, they're more speculative. That's definitely, you can see that, and rightfully so. When you're young, you're supposed to take greater speculation and be more aggressive for growth. And as you get older, you're supposed to pull back and have more money in short-term bonds and high dividend-paying growth stocks and gold. But I think they're doing the right thing. The other part is sort of history of research. They're very hungry for research. Like you're reading a book, learning about gold and the history of gold. Well, they went and we found for jets that there was research done that the airlines after 9/11, the world shut down, and 6 months later, the airlines were up 80%. When SARS hit Asia, 6 months later, from the bottom, we saw 120% surge in Asian airlines. And after 2008, 2009, it was 80%. So they're tactical traders, and they're doing this positioning, looking for there'll be a rebound. And they knew a lot about the airline stocks.
We're going to talk about your book in just a minute. It's a good read, by the way. But I want to dig into this a little bit deeper now. You say that they're speculators, which has helped them. But speculation is a double-edged sword, isn't it, Frank?
It is. And so the risk-taking is just smarter when you're younger, because you can always make up with over time. If you're 65 years old, you can't wait 8 years for the stock market to come back to. When we take a look at these crashes of 2008, 2009, how many years later did it take? Almost a decade to get back to your previous high. So you can't afford that if you're 65 to wait till you're 75, or if you're 75. So the model says that you should have shorter term income, high dividend paying, different sources of income, and still have this 10% weighting in gold or more. But when you're younger, you don't have to worry about the dividend income. You have to worry about making the bigger score by getting Apple early, or getting Nvidia early, or being early on a new emerging gold company.
I was actually having this discussion with a peer of mine, and I don't necessarily share his views, but this is just what he said. And he said, Warren Buffett can't really beat the market anymore, is what he said. And he said it's because he takes too long to make a decision. He's an old school value investor, and he has a checklist of everything he looks at. By the time he's done making a decision, the stock's already moved. Do you think that model is outdated then, you think?
Well, I think it's partially true, but I think that Warren's recipe is the most amazing, successful recipe. And you can't take that away from him. But I think he has so much money that it doesn't move the dial. So he needs a crisis in an industry, and then he comes in and he takes a big position. So when Enron's scandal took place and all the energy stocks fell along the unraveling of that company and all the energy companies, he came in and became the third largest energy company in America. When you had the other crash, and he came in and became the third largest railway company in America. He needs to have one of those events. And so that, to me, is most interesting. He took a position in gold, and he took it in Barrick. And I mentioned it before, I think because Barrick has a great CEO. Newmont, to me, is probably more attractive, but you're betting also on Mark Bristow, and both these stocks have free cash flow. Both have gold and copper. So I think they're very disciplined now with free cash flow yields. And that will be the big game changer this quarter.
One of the most common questions I get from millennial investors that I know is what they should be doing with their money and how they should be prioritizing their capital allocation right now. So I'll give you 5 suggestions, and you can pick what's the priority that you think they should be taking. And I'll ask the viewers this too. Comment below in the section on what you think the priority should be. A, invest in stocks. B, invest in precious metals. C, pay off debt. D, save for retirement. Or E, a combination of all of those things. What do you think, Frank?
I think a combination is important. I really do. And paying off your debt, it depends if it's credit card debt. But if you can go borrow 15-year money at 4.5% and invest it in stocks, or you can buy like the Grand Columbia Gold Note that pays you monthly and is paying you over 10%. So you have a positive rate of return. So I think you got to look at investments that way.
Yeah, but a lot of millennial traders, especially the ones in Robinhood, they don't like to diversify. They like to take the position, put it in the things, they select things they like, basically go all in on certain stocks. And you're recommending them to actually diversify the position a little more. Can you explain the benefits of using a combination of assets in your portfolio and why you should be diversifying, Frank?
Well, one of the secrets for all people that have made $1 million is if they're lucky with one big score, then there's few of those. Usually they end up getting from many sources of income. And the smarter ones that made the big score end up diversifying so that they have many different sources of income. Then they turn around, take that income, and then they speculate. What a lot of young people are doing, I said earlier, it's great to speculate. And they should know the DNA of volatility when they speculate. Such as gold has the same DNA volatility, the S&P 500. It's a non-event to go up or down 1% a day. If it goes up 2 or 3%, take profits. Falls 2 or 3% a day, buy. Gold stocks are 3 times what gold is. So if gold is up 2% and the gold stocks are up 9%, then guess what? Take some profits. If gold is down 2% and gold stocks are off 9%, buy some of gold stocks. It's understanding and respecting that volatility. And it appears to me that a lot of millennials understand DNA of volatility and they trade it. So they like the JETS ETF because it has greater volatility. They like oil because it has the oil ETF because it has greater volatility. And they like the gold stocks because they have greater volatility.
You're wearing the GoAU ETF hat and the shirt. Leads me perfectly to my next question. I actually got a question from a millennial viewer last night in my inbox, and he said, this might be a bit of a naive question, David, but how do I invest in gold? How do I actually buy gold? And I told him there are various ways to be exposed, but I'll let you, the expert, answer that question. What are some of the ways that a millennial investor can be exposed to gold?
Well, first of all, you can go to Kitco and buy and get delivery of a beautiful gold coin. And that's always a good way to start. Or you can turn around and buy 50 silver coins and get into the game that way. I think things of that nature, owning something physical for the start is important. With that, then I would take a look at gold stocks that can grow. I think the cheapest gold stock out there on a cash flow multiple today is Grand Columbia. It's just started paying a dividend. They spun off a new co, which Wheaton put on called Caldis. Over the next 5 years, its revenue cash flow can increase 5-fold. There's no many gold producers. Clearly, Barrick is not going to increase their gold production by 5-fold. It's just impossible. And neither is Newmont. But having a small cap stock that is fully funded in production with a profile, everything's approved to build out infrastructure to increase its production, I think stocks like that are worthy of a speculation. Like in my book, The Life Cycle of a Mine.
Let's talk about gold mining companies. What are the benefits of buying a gold miner versus the bullion? One of the counter arguments that I've heard as to why you should not own a gold mining company is why bother? Why not just buy the physical outright? Why be exposed to all the operational risks, bad management, poor cost control? Why put yourself at that as extra risk? How would you respond to that?
When you're in a secular bull market in gold, in which we're in, you will make more money on gold stocks than you will on owning bullion. You'll have more volatility. You'll have more, euphoria and depression periods, but you will make much more money because you get a multiple. You get a multiple for good success. So cash flow companies, these stocks will trade at 13 to 15 times cash flow. Bullion's not going to get that multiple. So as people become, and I think the game changer, it was Warren Buffett buying a gold stock. That is a game changer for many older investors of all of a sudden looking at pension funds that are very risk averse. All of a sudden, gold stocks are not deemed to be risk averse. And with free cash flow yields going to be a record, I think this is a very exciting time to be looking at quality gold stocks. Not buying the GDX or GDXJ, and for me, and the reason for that, because your money goes into both good and bad gold stocks. What I try to do with GoAU is high grade it for those companies that have the deepest value or the fastest growth in revenue per share and cash flow per share. And 30% are royalty companies, which have a superior business model.
Perfect. I want to talk about your book now. It's called The Gold Watcher, which you wrote in the mid-2000s, came out in 2008. What would you add to this chapter on why gold, because earlier in the book you did explain all the benefits of owning gold, including as a store of value and hedge, inflation hedge, all the traditional reasons of why you should own gold. But if you look around the world now at what's happening, we saw a huge influx of millennial interest in gold and gold-backed ETFs this year, especially on Robinhood. And so do you think they're trading gold differently? Do you think they're buying gold in the same fashion that you would be recommending in your book? Would you make any amendments to your book if you were to write it today?
I think a lot of them are speculating, and how long they speculate for in a position, I don't know. If the gamma's 3 days or 3 weeks or 3 months, I just know that the amount of money that's going in is unprecedented because it's more than the total dollar value of stock buybacks. So our gold stocks is helping light up gold stocks, and for saying that there's something undervalued here. And I can say as a fundamental analyst, they're now showing free cash flow. That means they're going to show up in Investors Business Daily, where the tech stocks show up. And they're looking for high returns on assets, growth in revenue, growth in cash flow. They're the growth stocks, and they're hiring new people. So I think that as more gold stocks show up in the IBD 50, that means the broader the audience of potential buyers, then institutions come in. Canadian pension funds and institutions are a joke because they're so underweight gold stocks, which are like 8% of the index. So I think that as they all of a sudden develop more safe, they feel safer about this asset class because of a Buffett, they're going to be buying more gold stocks. And I think you're going to start seeing an overall higher valuation for them. The royalty companies have 90% gross margins when you really look at it in detail, and when you look at their capacity with free cash flow and pay more dividends, it's huge. And they function like a SaaS stock, like a technology stock. Same high margins, monthly recurring revenue, ability to pay out dividends on a rising scenario of gold and silver. So I think the royalty companies are a great place for new investors to consider. Royal Gold, Denver, Franco-Nevada, in Toronto, Wheaton, Precious in Vancouver. These are all multi-billion-dollar royalty companies.
You think gold is a new Bitcoin for traders?
I think it's a different audience. I think Bitcoin is just very much a different audience of investors and speculators. What's interesting for me in that space as chairman of Hive Blockchain is seeing that when Bitcoin, Ethereum took off, Ethereum is the second most prominent coin in the world, created out of Canada. Ethereum is a smart contract, and it's the backbone for all these ICOs. And so as ICOs took off 3 years ago, Ethereum went to $1,400. Then it crashed, and now it's taken off again. It's because what's called DeFi, and this DeFi is all using Ethereum as its backbone. So, and Ethereum has 30,000 devoted coders and people around the world in that ecosystem. It's unbelievable. You don't have 30,000 eco engineers on gold stocks around the world. And so I think that audience is very different, and it's to recognize what that audience is doing. And I think it attracts the alternative asset class, predominantly out of Silicon Valley, that are really pushing this equation of educating digital money.
Frank, you've talked about $4,000 as a price target in the next 2 to 3 years for gold, but now you're talking to me offline about $7,000. Is that a different case? Is there a different set of catalysts for that price range?
No, as you know, the further you go out, the greater the volatility and the less likely your forecast. But I think that your $4,000 is very reasonable and rational based on the amount of money printing. And what the Federal Reserve said, Powell, that these low interest rates are to 2023. 3 more years, that's a perfect scenario. Rates not going to go up. We have negative real interest rates with their inflation number of 1.3. And I know it's not 1.3% inflation. Housing in America is up 10% over the year. And I was with architects this morning, and they're saying that lumber for building of houses has surged 40% since the coronavirus started. 40%. And now we have a housing boom taking place. There's big inflation, and it's more like 8%. So if you can borrow cheap money now and buy good dividend paying stocks and companies that have the capacity to increase their dividend, that's a strategic, smart move.
Final message for millennial traders and investors. What advice do you have?
Know the DNA of volatility, like we talked about earlier. Another thing I want to write about is called sigmas, the standard deviation move. And so if I take a look at where is gold? Gold has these incredible breakouts and downs, drafts on the 10-day high-low. We can see all of a sudden switchers and traders coming into these asset classes. And then we see what's called the standard deviation move, and we were up 2 standard deviations. We've gone through the correction. If you look at the 20-day rate of change, gold is down. If you look at the 60-day, gold is correcting. So it's basically at a neutral phase. So I think we're just in a perfect position. Gold made a 10-day high this week. Gold equities, many of them made 10-day highs also this week. They pulled back from, I think it's like 1973 was the 10-day high. Now we're in the 1050-ish range. It's normal. So on these pullbacks from a 10-day high, you buy them because then they surge usually higher.
Perfect. Frank, thanks so much. I'm sure a lot of traders and investors will appreciate your message. I appreciate you coming on the show today. Thank you for watching Kitco News. Denver Gold Forum is our coverage right now. Stay tuned for much more. If you're watching this on YouTube, don't forget to comment below on what you think are the investment priorities for you and subscribe to our channel. Thank you.